The reason for Sandy Munro's complete share sale in the top electric vehicle brand has been the subject of conjecture. Sandy Munro is a manufacturing and machine tool specialist employed in the automobile sector. He started off as a toolmaker at Windsor's Valiant Machine and Tool, a supplier to General Motors. In recent interviews, the automotive production specialist discussed Tesla's future and provided an explanation for his actions. What made him sell his Tesla stock then? Does he still think highly of Tesla? To find out, keep watching. His Troy, Michigan-based consulting business, Munro's Associates, was established in 1988. This business specializes in lean design, which entails disassembling cars to look into and suggest innovations and improvements. Munro's company has disassembled hundreds of cars to study their construction. It is an expert in this field. The thorough assessments are purchased by suppliers and manufacturers who use them to help design, price, and improve their goods. For instance, they examined the 2015 BMW i3, a cutting-edge electric vehicle that made extensive use of polymers reinforced with hemp and carbon fiber. Their entire cost analysis, which was first offered for $89,000, took $2.1 million to produce. Due to Sandy Munro's reputation as a Tesla fan, there was significant agitation among investors when they learned he had sold all of his stock, which sparked rumors. Some felt it did not look good to be an investment in one firm at the expense of the others, because Munro and Associates works on automobiles from a number of manufacturers. To keep the impression of independence, Sandy Munro sold all of his Tesla stock and made no further auto investments. He talked about this in detail in a recent interview. To put it briefly, he believed that in order to prove that he is an objective observer of the business and a product assessor, it was essential that he have no shares in the company. In a YouTube video, he clarifies this, stating that he is still passionate about Tesla and does not wish to come out as prejudiced. While that makes sense, a more pessimistic perspective would be that he made this revelation just to make news. It's possible that he also placed them in a controlled account. Some people think Sandy, like Musk, works for his company to make headlines, so he'll gladly adopt a controversial position if it brings him more publicity or opens up new job prospects. Car manufacturers have occasionally tried to quiet vociferous critics by offering them high-paying consulting positions, but this strategy rarely succeeds. Munro has a long history with Tesla, so his claims that he's still passionate about the company make sense. On the Tech Channel Hyperchange, Munro has previously discussed why Tesla has such a clear advantage over its rivals in the electric vehicle market and which companies are actually committed to closing the gap. According to him, the majority of Tesla's rivals are just making token attempts. They use the same strategy and aren't passionate about their goals. The specialist in car production also thinks they entered the market a little later than others. We'll just get something into the marketplace, they announce, and when they do, it's not even an electric vehicle. It resembles someone's conception of what an electric car ought to be like. He claims that in addition to being constructed of awkward materials, the proposed car was not designed to be an electric vehicle. According to him, the majority of rivals are similarly attempting, albeit improbably, to fit an outdated business model into a fresh product. Munro is also anticipating the arrival of Tesla's pickup vehicle. If Munro is correct in his assessment that Tesla is now ahead, the Cybertruck will take things a step further by creating a completely new market for automobiles. He clarified this by stating that it belongs in a different category. It's usually called a pickup truck around here because it doesn't fit into that category. It isn't the case. It looks like a new class as a result. It appears that automakers in the US and Europe are dismantling Tesla in an attempt to better grasp the technological components of the business. Although Munro claimed to be dismantling electric cars from various manufacturers, he initially started with a Tesla at Audi's request. Other electric cars that were looked at included the Tesla Model I, Tesla Model 3, Jaguar I-Pace, and Chevy Bolt. The experts claim that while the Tesla vehicles have strong engineering, unique and unusual technology, and subpar bodywork and manufacturing design, when compared to earlier generations, Munro asserted that improvements in later Tesla vehicle models were definitive. Beginning in February 2018, the public's interest was piqued by Sandy Munro's documentaries, which included in-depth disassembly and analysis of the brand new Tesla Model 3. Subsequently, Munro and Associates started their own YouTube channel, Munro Live, where they explain engineering and design methods along with dismantling and analyzing a variety of family electric cars. In his most recent disassembly, he disassembles a Tesla Model I and presents some amazing findings. Munro claimed that what he found in the Model E was amazing and above and beyond what he had anticipated. He thinks that in order to stay ahead of the competition, competitors need to get their act together because the bar has been lifted. In Munro's opinion, Tesla is at least a decade ahead of its competitors when it comes to making changes to production cars at the last minute. Additionally, the engineer believes that Tesla delivers a product that is essentially 90 or 95er and uses a strategy of essentially waiting for customers to complain before making quick changes. Supporters of Tesla argue that the company offers prototype cars rather than automobiles that are produced in large quantities, which may make Tesla more flexible than other businesses. Additionally, the engineer said Tesla should never build an electric car that costs $25,000. Such a car would present more risks than benefits for Musk firm. The Korea Times reports that Munro thinks Tesla stockholders will regret their choice due to the low cost of ownership and potential earnings growth. The engineer claims that while most Tesla buyers desire every feature the company has to offer, not enough Model 3 standard range cars were sold for Tesla to decide to stop selling the Model I at that trim level. Technological developments in battery chemistry, design, and even production may be able to reduce costs for the company without sacrificing overall power output or factory efficiency. Musk stated that advances in manufacturing automation should allow Tesla to produce a car that retails for $25,000 in 3 years. When we created the Model 3, Sandy Munro stated of his projections, we were at $158 per kilowatt hour since the days of production hell in the notorious tent. During a conference call sponsored by Bernstein analysts, we estimate that the Model I will cost about $108. He said, due to many variables, including chemical alterations, the prices have drastically decreased during the past 2 years. Perhaps this one will drop to $70 or $75 per kilowatt hour. That's a really big step. However, in the end, I don't see it. Whether it's $25,000 or $20,000 car, Munro essentially argued that Tesla could only be made less feature-rich before it lost its appeal as a vehicle. As wealthy rivals like Volkswagen seek the mass market electric vehicle sector, Tesla needs to make sure its upcoming models can still win and over customers. Many disagree with Musk, who has long said that Tesla wants to assist in the global transition to sustainable energy. In response, Musk stated, we need to produce more affordable cars. The fact that we don't currently have a truly affordable car, something we will develop in the future, is one of the things that most irritates me. But first, we need to bring down the price of batteries. Like the majority of this channel's viewers were with Elon, we are aware of Elon Musk's perseverance, which may have contributed to Tesla's success thus far. Following the announcement of a profitable first quarter and a strong financial balance sheet, particularly in terms of free cash flow, Tesla has continued to rise. Tesla managed to navigate challenging macro conditions in the industry and got closer to Global's investment grade rating. IP Global Ratings said today that Tesla Incorporated's first quarter results show strong execution and potential for robust free cash flow in 2022, notwithstanding supply constraints. Perhaps the most astonishing statistic of Tesla's quarterly breakdown on their shareholder deck was the company's ability to navigate through global supply chain concerns and chip shortages, two issues that have impacted multiple industries, with the automotive industry being one of the most affected. Do you concur with Munro that Tesla shouldn't produce the vehicle that costs $25? Please leave a comment below.